increase year on year. Subsequently, the net interest income stood at 21.2 crores, reported a 10% growth quarter on quarter and 49% year on year. Our PAT for this quarter stood at 11.2 crores, an increase of 5% quarter on quarter and 58% year on year. As shared in our earlier updates, we have completely migrated to our bespoke customer onboarding and loan underwriting platform with multiple API integrations in Q2. We have also completed our integration with the collection module. In our next efforts, we are working on building a credit rule engine to further strengthen our underwriting. During the quarter, we have also added 4 new branches, taking the total to 26 branches spread across 6 states. All of these additions have been in our existing markets following a clustered approach. On the new product and the customer segment side, as communicated earlier, we are looking to add an unsecured loan product for MSME in Tier 2, Tier 3 cities. We expect to do this by the end of this financial year, or maybe in Q1 of the next financial year. We are already working on it, and we want to build a platform first, and hopefully we should start by the end of this financial year. Going forward, on the credit rating front, we are due for a review in the coming months, and we are quite optimistic that we'll be able to achieve an upgrade which will help on the borrowing side. Our current portfolio mix of 16:37 for wholesale retail is not far from our stated target of 60:40. But partly because of the flat loan book of the wholesale front last 2 quarters, which I believe is a temporary trend, nonetheless, we will keep working towards having our desired AUM mix. I would like to reiterate that going forward, the basis of operational cost, especially the employee cost, should remain same as now we have sufficient team strength to scale up to a loan book of 1,000 crores. These are the brief update on our balance sheet and the quarter, and now I open up for your questions. Thanks very much.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. Participants, to ask a question, you may please press star and 1. The first question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations for the steady set of numbers. Sir, on the SME retail side, we have seen a very sharp jump in our loan book. Last year in September, we were around 61 crore of loan book, which has now increased to almost 223 crore. So how are we ensuring, we follow good credit practices given the sharp jump we have seen in our SME retail book, loan book?
Yeah. So as we have already told in our earlier calls also, our effort was to build our SME segment, especially COVID, we took a hit on the fresh disbursement. So a lot of exercise went during that lean period of COVID, where we worked on our processes, worked on hiring team, and worked on building a new platform, which was suitable for and as per the needs of our segment, which we are focused on. So sum total, so a lot of focus has been on the SME, and very frankly, for last 1.5 years, involvement, which earlier was used to be on the wholesale side, has also been more on the retail side, and so the sum total of all efforts of our team and the improvement of team strength, lot of effort has gone in improve. We opened 8 branches during last 9 months, and at the same time we improved the infra and the locations of all our branches during last 9 months. So a lot of exercise has went, and as a result of which you are seeing that the numbers are also coming out.
Sure. And sir, one thing I wanted to understand is that, a lot of our wholesale book is largely on fixed loan basis, and even in SME, we have fixed loan books. So given the increase in, the interest rates, how are we handling such sharp rise in interest rate, and how is that impacting our net interest margins?
Yeah, Ankit, we mentioned a little bit in the presentation also. Look, you have to understand, we are working already in a little higher IRR bracket, and especially the retail one, the customers which we are dealing, they are from tier 2, tier 3 cities, small, micro, SMEs, self-employed businesses, they run their businesses, and they understand more fixed EMIs, fixed tenure. When we do a floating and sometimes we change the tenure or change the EMI, they are not able to understand, and we thought as our tenure period is 5 to 7 years, it is only during that last 9 months that we are seeing that abnormal sharp rise in our interest rates. Otherwise, it will, when we see a little dip, so that will also benefit. So we thought that we will stick to this fixed interest rate in the SME side. Where in SME certain portfolio which we are acquiring at a little competitive rate between 16 to 18%, we thought that we should move to the floating one, and so in the next 1 or 2 months, especially when we are working in that interest bracket, we will do on floating, and plus 18 we will still like to maintain on the fixed part. And the same goes with our wholesale, where we thought that when we are acquiring a customer between 15 to 17, we will work on the floating rate linked with the repo rate, and 17 plus will still be at the fixed. And especially on the wholesale, our average the account rundowns between you can say on an average 24 months. So it is not that we are having a customer which is there onboarded for 4 to 6 year kind of a loan tenure on the wholesale, and sometimes you have to understand that keeping in view a little higher interest bracket, so the customer is little more flexible, and sometimes he see the benefits. The company is giving me fixed rate, otherwise they are giving floating rate. They increase sometimes beyond our expectations. So all those gives a little added feature to our product also, and we will like to remain with that, and it is only a passing phase, maybe 6 to 9 months or 12 months, and when things stabilize and the interest rates are going to remain higher, then our slowly and steadily our portfolio will also align to that. But moving everything to floating, we think is not in the right interest at this stage, barring where we are acquiring the customers at a little competitive rates, both on retail and wholesale.
Sure. And the new lenders that we have onboarded, ICICI Bank, Kotak Mahindra Investment in Cholamandalam, at what rate of interest are we getting loans or short-term borrowing from them?
Between, I would say, 9% to 10.5%.
Sure, and this is floating?
This is some linked with T-bill, some linked with their MCLR, but very few linked with the repo rate. So what has happened? Repo rates have moved higher, but the corresponding increase in the MCLR is not at the same rate at which the repo rate has moved, and the same goes with the T-bill. So, most of our loans are linked with the treasury bill or with the MCLR.
So, okay. And sir, last question, how do you see disbursement on real estate and SME retail happening for our company in the second half of this year?
I'm not able to hear properly. Can you just... Yeah. So I have Chandan along with me. You would like to add something, and then...
Chandan this side. Actually, Ankit, the market is performing very well. The real estate scenarios is also very much bullish. We expect quite good disbursement in the coming year. We have built up a good pipeline into the coming quarters as well, and we see a good disbursement in coming or later 6 months, second half of the year itself.
So Ankit, sometimes wholesale is a little lumpy, both in terms of disbursement and sometimes in terms of a little collections also. because when you work on a proposal, sometimes it will take a lot of time, and right now, so few you onboard or few you are looking at, so you will see that in a particular month, a lot of disbursement has happened, so that is a little peculiarity with that. And first 3 months of a new financial year is always little slow. So that was the case, and we were quite bullish that the next 6 months should be good.
Sure, sir. And sir, last question on the employee cost.
Disbursement. It is only that our collections were very strong. We have done a disbursement of more than
220 crore. Yeah.
Yeah.
Yeah, sir. And sir, last question on the employee expenses. We have almost touched 4 crore kind of employee expenses this quarter. Although in the call and as well as in the presentation, there is a one-off cost of ESOP. Now, how do you see this cost, panning out for us in the second half of this financial year? Employee cost. Yeah.
Okay, very frankly, because this is one cost which has gone, and we think that now this cost will be justified by a productivity, where our main focus is on the retail side, and most of the cost has gone there. And we have been little aggressive, as you can say, more prudent what we were during COVID period or prior to that, and now we have fully moved to a new platform with all those processes, and now we don't want to work with a little, we have had a full team on all fronts, maybe operational, credit, sales, and so we have seen it, and we had an appraisal in first quarter, so little bit around 22 to 28 lakhs, I think, is the ESOP expense in this one, and we see that now more or less we will not see any major change in our staff strength, the employee strength in coming 6 months to 9 months, and the focus will be improving the productivity, and that is where our major focus is now going forward. Because when you start and you do with the little the expansions and all those open new branches, the numbers don't start coming up from the day one, and when you hire a team, they also take time to understand the product of the company. So going forward, this cost will be justified, and by the productivity only. Yeah.
Sure. Okay. Thank you, and wish you all the best.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1. The next question is from the line of Pranil Desai from Total Capital. Please go ahead.
Hi, Rohit and team. Congratulations for decent numbers. So the first question is, so we have done around 425 crore of disbursement in first half, and we are trying to move mix towards retail. So incremental disbursement, is it safe to assume that 70% kind of a number is towards retail disbursement?
Look, I can't put a number, but look, it's a mix of two things. One, our ability to raise fresh funds at the right cost, and secondly, we have a very clear mindset that our first priority is on the retail, where we see that averagely now we are doing between around 15 to 18 crores per month, and which we hope to take it to around 20 crores per month with the existing on the retail and with the existing setup and wholesale. So is not an issue, very frankly, with us. If you want to increase that portfolio, we can do that. So just sometimes we have seen a huge buoyant real estate market in last 9 months to 1 year. We become little bit, let's see how things play out. So otherwise, increasing the portfolio on the wholesale is not a challenge for us.
Okay. Second thing, we just noticed that last 4-5 quarters, our yields both on wholesale and wholesale had gone down from 17.1 to 16 point something, and on the retail side also the yields are either stable or going down, and you are saying that incrementally we are also looking at 16 to 18% kind of a yield. So should we assume slightly lower yields going forward than what we have been doing so far?
Yeah, definitely. Right now we were working on a fixed interest rate method, and so that's why with increase in rates we were not able to pass on. Now, as I explained earlier, we will having two fixed rate with the certain segment where the IRRs are comfortable and little where we are pricing ourselves competitively, we will have a floating rate. And going on the yield side, yes, definitely the new acquisition will take into account the rise in the interest rates, and which we have already started doing it. So 50 basis to 100 basis, I would say, not to put a figure here, but yes, definitely we will be factoring in the rise in interest rates, and to some extent we'll be able to pass on to our borrowers.
Okay. And any updates on the whatever provisions that we had made for the education segment, and things are now back to normal? So any write-backs, or kind of are we recovering the money?
We are witnessing write-backs every quarter, and we already have a write-back of 1.61 crores. I think out of a total bad debt of 6-7 crores, and last quarter also the March we had a decent write-back. So right now 92% of the education sector portfolio the customers are paying. The lot of we had around 43 accounts in surface were 20 lakh plus, and most of them were school cases, and we have recovered or fully closed, made them regular 29 cases, and it's a deadline that by end of December, barring one or two cases which have gone into legal, we will be able to regularize all the rest of them. So because till January 22 there was embargo by the Supreme Court not to take any legal actions, and now the schools have also opened up. The customers are paying up. Some are paying 1 or 2 EMIs every month, and for us now the school portfolio we have started again lending to the school segment. And so COVID was an extraordinary period where schools, especially in tier 2 cities, were closed for 18 months. But the portfolio did exceedingly good before COVID also, and we are still very, very bullish, seeing such a huge bad phase which we don't think will come again. It has only strengthened our view that school segment is very good.
Okay.
Provided you do within the parameters which we have laid down.
Oh, okay. And last question. So I think we opened 4 new branches, right? And last time I think you had mentioned that till 1,000 crore, we don't need any new branches or anything. So is this because we are trying to feed a market to go beyond 1,000 crore? That is the thinking behind opening these new branches?
I would not say that we never work with that we have to achieve this thing at any cost. We always see the rationality and the confidence that that segment and the particular area gives us. So Rajasthan has been doing reasonably good, and Amit also has, Amit, who is our CEO on the retail. So Amit, who is joining from our Gurgaon branch. So Amit, you can explain more. Amit.
See, the idea of opening up these 4 branches was to when we saw the potential in the Rajasthan area, and it has been performing well over the years, like in my earlier career also, and in the recent book size also. So we don't believe in we have said that we'll not be opening the branch. If we see the potential, we'll make the inroads first with 1 or 2 RMs, and once we see the business is coming up, we try to set up the infrastructure when we touch a crore of a book. So it's like that. So we don't want to leave the market which is adjoining to our branches also. So the idea is not only to to penetrate the market, but also to stabilize the state in terms of we don't want to lose on the opportunity. So that's the idea, and it is also for the building up future retail book in that particular area.
Got it. Very useful. Thanks. All the best.
Thank you.
Thank you. Reminder to all the participants, to ask a question, you may please press star and 1 on your touchtone telephone. The next question is from the line of Dheeraj Sachdev from Roha Asset Management. Please go ahead.
Yeah, hi Rohit. Just wanted to know this aspiration that you mentioned about 1,000 crores. By what time you want to achieve the disbursement target?
Definitely, we have always refrained from giving any number or dates and all those, yeah. Because as a company, when we see the potential, we will definitely like to grow ourselves, and so now our confidence after COVID and all those the changes which we have done on the retail side and is much more, and we have added a lot of new lenders with us, and going forward, so we are able to raise funds at the cost and which we have thought. Definitely, we will be able to do numbers, but I don't want to give figures because that has been our policy. Because yeah, definitely the last year has been good, and we see that it should remain good in like 6 to 9 months.
No, Rohit, the number that is already being given in your presentation, so I'm not asking for that. You've already claimed and given that number. I'm saying that if the disbursement growth is about 20-25%, will you be achieving that target in less than 3 years' time?
I think we have not given any year or by which year we will do it.
Yeah, but you've given a 1,000 crore aspiration. So I'm just extending my discussion on the 1,000 crore aspiration.
Yeah. So it's a target. It's a first target to do 1,000 crore, and as a company we want to do as early as possible. But we are always see the dynamics which are being playing in the market, both in the segments, and the market gives the confidence. Definitely, you will not see as a company that we are lagging somewhere.
Yeah, but I think you can always stick your neck out that probably you will grow at 20-25% in terms of disbursement, because as it is, the book size is small, we are under leveraged. We have attained some critical size right now, and the market segment is also recovering.
There is one thing in now the interest rate being rising in the interest scenario. We have always refrained from borrowing where we just to increase our book. We want to increase, we have to have a profitable growth with reasonable NIM. Yeah. So I just don't want to add by borrowing between 12 to 14%, and if I want to follow that route, then it's much easier. So we still believe that we should stick to the way, and we have been able to add borrowers, and now we are very much proactive on building our liability, and hopefully our rating is also under review, will be reviewed in next 2 to 3 months, and we will be able to do it. Now the team, the infra, the product, the processes are in place as compared to what we were in last 12-15 months back. So on both the front end and the wholesale, we have now going beyond our NCR region also. So the numbers provided we are able to raise funds, we will be able to do that.
Okay, so the incremental cost of fund, is it 12-14% since you mentioned that now, or incremental cost is still limited to 10?
Become too aggressive, start approaching NBFCs, or our focus is always to go for PSUs and or private sector banks, where we can target low cost, and at the same time may start with a small amount, and those are bigger banks and institutions where going forward, once you build a relationship, then leveraging on that is much easier.
Just wanted to know what's the incremental cost of fund right now for us?
Right now we are raising between 9.5 to 10.25.
And we are confident that we should be able to be within this band, even if it is 10.25% at the upper end.
If the repo rate increases, then definitely it will change that metric. So if things remaining constant, then we will strive within that bracket only.
But it will still make sense, right? Because our spreads are 6 to 9% higher than the cost of funds.
No, I'm not saying that it doesn't make any sense, but sometimes you add a small lender at a higher, then everybody starts giving you that example. Yeah, you have raised at 12-13%. Why not?
Right. Got it. Fine. I think that answers my question. Thank you, sir. Thank you, and all the best to you.
Thank you. The next question is from the line of Dharmesh Patel, an individual investor. Please go ahead.
Hello.
Yeah, hello.
Am I audible, sir?
Yeah.
Sir, I just wanted to understand some of the risks associated with our wholesale segment. Sir, just in case if there is we had this direction of Supreme Court about the demolition of a twin tower in Delhi or NCR. Sir, what will we do if we face such situations? Because ultimately it was the bank and customers who took the hit.
Yeah. So I will just take it now, yeah. Chandan will explain more in detail. I will just like to add. Those are very one-off kind of a thing. And now after coming VERA, most of the authorities have gone online. They have also more transparent in the last 2-3 years. Processes are more transparent. DTCP Haryana, the UP government, the Ghaziabad Development Authority, now every filing is online. Most of their things. So they have become much more transparent. So we have evolved. We have evolved from a very boom phase of 2003 to 2011-12, or lean phase of 2012-13 to 2020 to, I would say, mid of, so that, and where everybody has evolved, builder also, where when they thought that they have a strong arrangement with their local bodies and with the political parties, now everybody has realized, lenders have also seen, and the builders and every customer. So I don't think so anybody will dare to do those kind of things. And as a company, we are very, very particular whether the builder is working as per the sanction layout plans, the FAR which were originally there, he is not doing things which is beyond the rule book. So that is, we are very, very cautious and very, very clear. Even if we don't have the business, but we don't take those things at all. Yeah. So it depends. That is where I would say, because the real estate is very, very local, regional, I would say, and one has to have a very strong understanding of the local state bodies' laws, what is happening in their bodies, and that is where I would say a little knowledge makes an edge. And with the companies, where sometimes the senior team sitting in a particular head office, and sometimes they are not able to fully accustom what is happening and what is your risk appetite, and we are very clear that we have to only go with the customers, the borrowers, which follow the rule book. And we, as a company, we have to have fully aware. Our knowledge should be there so that we are able to understand that. And Chandan, you will have to add something?
Yeah, one more point. The thing is that we, as a company, made a policy that we don't believe on the too much of the exceptions. Whatever the instances which you are mentioning about that the risk associated in the real estate market itself, that is due to the exceptions taken by the lenders or the borrowers borrowers. That is not as per the market policies or the local policies itself. So, being a company of CSL as a company, we never took that kind of exceptions into our policies, or we don't take those kind of deviations. So, till now, we are very much prudent on that part, and like too much away from these kind of risks that is prevailing into these kind of real estate markets.
But so, to rule out that there can be any risk, yes, definitely. Yes. Product is built, and consumer demand is there. Suddenly there is no sales for 12 months to 24 months. Things can be little difficult. All of a sudden, any change which nobody thought, like comes out of the blue, kind of a COVID situation, or but we are very, very prudent, and we always think that even if there's some problem in a project, we have something to fall back on, and because we are there for last 12-13 years, and we work with small mid-size developers only. So it is how you are able to hedge your risk and take those accounts into your portfolio. So that is where I would say a little expertise is required.
Okay. Sir, there was a second question for me. Sir, there's always a risk of earthquake or natural calamity in Delhi or NCR region. I think I saw in BBC today itself that there were tremors in Delhi or NCR region. Since major part of our wholesale lending is concentrated in this region, how do we cope up with it if we face such a situation?
देखो ऐसा है, अब तो ना मेरे को लग रहा है you're a little very fearful and thinking all those things. Most of all projects are fully insured. First thing from our case and all those. And
I agree, sir. They may be insured, but just in case if there is an event, all the things will come to a halt all of a sudden for some time at least.
Kind of situation आ जाएगी, all standing buildings will be blown up. तो फिर CSL कुछ नहीं कर सकते. वो तो इन्वेस्टमेंट हाँ. तो आंसर फॉर दैट कि कल को कुछ पाकिस्तान ने अटैक कर दिया, बिल्डिंग उड़ा दी गई.
Actually, sir, Delhi itself is a earthquake prone region. Everybody knows that.
Key point है, all those buildings are built as per the building guidelines. I think 8.5 to 9 Richter scale buildings are capable of handling that kind of scenario. So all those guidelines are there, and those guidelines are very very strict. But if something out of black swan happens, so nobody has any control.
Okay. And then, sir, one more question I wanted to ask. So I think in the past we had talked about the same model of Delhi NCR. We will be trying to replicate in areas like Chandigarh, if I'm not wrong.
Started exploring. We have already put up a team there. We are doing Reiki, meeting possible borrowers, and we are understanding the market, doing meetings, and we have done one transaction, and slowly and steadily we will move out, because to understand the market, meet those potential borrowers, understand that it takes time, and we don't want to rush in.
So how long will we be able to go over there? I mean, how long will it take to normalize transactions in Chandigarh, like Delhi NCR? 1 year, 2 years, or something?
We have already passed through initial period, and yes, definitely, I think it should start materializing in this financial year itself.
Thank you. The next question is from the line of Viraj Mehta from Equirus PMS. Before that, we'd like to remind the participants, please press star and 1 to ask a question. Viraj Mehta, please go ahead with your question.
Yeah, hi. Congratulations, Rohit. Rohit, when you open a new branch, I mean, how much expenses do you think we incur, and what's the break even? I mean, I know you had mentioned that 20 crores is a good number for a branch. Is that number still correct?
Yeah, I would say the branch becomes decently profitable after a 10 crore kind of a portfolio. At 20 crores, if the quality is good, the branch is doing reasonably very good.
Right. And just a small thing I want to understand, there is a disconnect in the update you had put on BSE and the presentation. In the BSE update you had put, the loan book was 590 and in the presentation it is 602. So that was the only disconnect.
No. This is a balance sheet figure you are taking is 586. It is net of ECL. We say gross. It's an initial provision of 8 crores, and then we have a NDS provision where they are unamortized PF and all those are not taken into account. But our actual book, gross book is 608, where it is 602, and it is we have an ACL provisioning of 8 crores, and we have a NDS adjustment of 8 crores.
India's 6 crores. India's adjustment.
Sure.
6 crores. 6 crores. Sorry, 6 crores.
Sure. Thank you so much, and best of luck.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Good evening. I hope I'm audible.
Yeah. Good evening.
Yeah, hi. On the SME side, first of all, congratulations on a good set of numbers and a good growth. On the SME side, sir, just wanted to understand the disbursements. Generally, what is the nature of the end use of these disbursements? Is it like purely working capital, or is it like more expansion oriented?
We'll add, and I will just put one line before he will explain in detail. Yeah, we give it for business purposes, and But if anybody says that we can control the end use, yeah, definitely 20-30% sometimes go for repayment of some small loan or maybe a renovation or putting up some additional expansion in his house. But mainly our effort and we give it to a person who at least put 60-70% for his business expansion. Yeah, maybe it's maybe a small capex if it's a manufacturer, small machinery, or maybe renovating his shop or putting up some additional stock into his business. So yes, Amit.
Yeah. So it is rightly given by Rohit sir that it is basically for a business expansion or a working capital which is required for the customers to multiply their businesses. So like in SAB, we also see the underwriting trade where what kind of business they are into, what they have done in the past 3 to 4 years, whether they have multiplied the businesses or not, and they intend to take the funds and to apply to increase the business. So particularly the main focus of any underwriter, any credit team or any company is to fund those customers who are churning their cash, churning their business on a daily basis or a monthly basis, and they want to increase their productivity by taking working capital loan from NBFC. So that is the main idea, and also we also believe in that if somebody is running small loans and they want to consolidate their debt, so that is also the idea. But yes, the prime focus is only for working capital and business expansion.
Okay, just one continuation. Now you say generally like 60 to 70% of the loan is used for business purpose, which may be like funding working capital and all. Or so 20-30 may go for repaying of existing some other loan or capex. This question could be naive, but if the purpose of the loan changes, wouldn't your working of the EMIs or your working of getting the money from that asset or from that business change? Because versus a working capital loan where the turns would be much faster in 1 year versus a expansion which can take like 2 to 3 years to fully consummate, won't your own working of EMIs change, or how do you build in that change in your model or your EMI working?
Yeah, just one thing which then Amit will come, and because you have to understand the kind of segment we are targeting. The very, very small kirana stores, dairy, running dairies, maybe running sweet shops, saloons, maybe small clinics. So these kind of customers, we are funding them. So when we fund them, we see their existing infrastructure and their requirements, and whether this requirement is genuinely for business purposes or some other purposes. And they are very upfront. Sometimes they tell we partly want to use for higher studies of my any son or any child, or partly will go for business expansion. So, and they want in a single installment in most of the cases, 10, 20, 15 lakhs, 5, 10 lakhs, they don't want in stages where you can monitor and use that. And that is what the trend is. And so we have to see whether that customer has grown and he has built up, whether his requirement, what he's saying, whether it's the actual end use of that. And our audit team also visit a post disbursement after a few months to see that where the money has gone. So if any NBFC or any company says that they have 100% control in the segment where we fund in, that is not possible. Yeah, definitely, because they are also want to utilize their money because in the business only then they can repay. So, but we make the call on the basis of existing business itself, even if it doesn't grow. So we don't take into account the future potential growth that will come out with a fresh cash flow. So, Amit, anything you?
Yes, I will to add that in these kind of customers, they are hardly been under financial inclusion, and they take loans, small loans at a very higher rate to bridge the gap for requirement of the cash at the particular time. So these small loans are very at high rate at around 28-29%, and they are bearing the brunt of high EMIs, which may be affecting their eligibility, as well as now they have graduated from there and they want to consolidate into one EMI by taking it for around 5 years, 4 years loan from us. So it is always good for them to pay one EMI at one time rather than paying multiple of EMIs to different banks or NBFC. This may hamper their paying habit also. Plus, they may go for some kind of bounce in the track because they don't keep much of cash in the bank. So it is always to organize their system and bring it to a table where they can pay only one EMI. So that's the idea.
Okay. So the funding of the loan or the repayment of the loan, a large part would depend upon the existing cash flows rather than the end use of the loan. Would it be right? So when we are making the assessment, the existing cash flows should be sufficient enough to do the repayment.
That goes without saying because unless until we see the cash flows, we'll not be able to make out the eligibility. No matter we may be having a very good property, but the main crux of this SME retail lending is based on the cash flow analysis done by our credit team. So only debt consolidation happens only when the cash flow is good.
Okay, and last question. Now we are expanding so many branches, and we've been on expansion phase. If I have to understand, what would be our rejection rate? So if we are getting 100 proposals, how many we would be rejecting based on our assessment, and how many we would be passing in terms of end approval?
So on the base of 100, we see source 100 cases. We have a sanction of around 45%, and from sanction to disbursal, it goes for around 32 to 33%. So this is the rejection ratio you can say is up to around 60%.
Okay. Thanks. I will come back in this.
Sure.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to Mr. Rohit Gupta for his closing comments. Over to you, sir.
Yeah. Thank you everyone for participating in this call. Your questions are important for us, and we strive to be transparent in our investor communication. If there are any unanswered questions, please get in touch with our investor relations team to take it forward. Thanks again. Thanks very much. Thanks, Ayam, and your team.